Good morning, everyone, and thank you for joining this part of Innovation Friday. My name is Sam Larke. I'm the project manager for Leicester Startups Co-working project. We're here to have a conversation about new money, a discussion on the investment market for research, development, and innovation. And it forms part of Leicester Startup Week. There were several other events that happened earlier this week. But there is one next week. Larke Uni are running a sports technology entrepreneurship day. So it's not quite finished. Very grateful to Lewis and Haroon for joining me today. I'll let them introduce themselves in a moment. But first, just a quick bit of context. So what are we? Why are we here? It's a project in a community of entrepreneurs, founders, mentors, investors, and we're here to help existing and aspiring startups in Leicestershire. We do this by organising events, introductions. We promote our startups. We've got an amazing podcast series. Our co-working space opens in April, fingers crossed, hopefully. And we've got an accelerator programme, our second one, starting on the 22nd of Feb. Applications are still open. You can find details on our website. So if you need any help on your startup journey, obviously there's loads of support at the hub, but we also exist. Can't thank the LEP Local Enterprise Partnership enough for funding this project. University of Leicester are the contract holder, but we have a partnership with DMU, Cooperative and Social Development Agency, and the local authority, Leicester City Council, through the LCB depot. So big thanks to everyone involved. One of our accelerator participants from last year is here, and we're going to be using his platform to facilitate the questions and upvoting of. So Mukhtar, do you mind taking, I don't know, perhaps 30 seconds just to explain to the participants how that will work, please?
Yes, hi there, everybody. I was one of the people that were on the first accelerator program on Leicester Startups. So the platform is a live Q&A feedback and insights tool that's used with Zoom, Teams, YouTube, or wherever you're holding a discussion or a Q&A session. So the whole point of it is to consolidate all of your Q&A activity for the organization. So we've been doing it with Leicester Startups throughout the week. Whether it was, we were doing it on Zoom now, but today we're going to be trying it on Teams. It's going to be exciting to see. There's already been some questions on there, so that's been live. So if you guys want to drop in your questions in there, that would be great.
And is the link in the chat, Mukhtar? So people can see? Yeah.
Yeah, they should be able to see that.
Right, so I will share my screen in a moment and folks can see what that is like. But Lewis, would you mind going first, please, and introducing yourself?
Yes, good morning, everybody, and thank you, Sam. And I've managed to see quite a lot of Startup Week this week, so congratulations to you and the team for an excellent week. And many thanks also to Leicester Innovation for inviting me to take part this morning. My name is Lewis Stringer. I work for an organisation called the British Business Bank, and the British Business Bank is Government Economic Development Bank. That sounds very grandiose, doesn't it? But actually all that basically means is that we work with government and commercial funders in the marketplace to identify gaps for small businesses around access to finance, and we attempt to fill them. We're not an innovation agency. We don't provide grants. We provide, through funders, early stage debt and equity finance.
Thank you, Lewis. I'm mindful I put the share screen up whilst you were talking. Apologies for that. Haroon, if you could introduce yourself, please.
Yeah, hi, my name's Haroon Shaikh. I'm an entrepreneur, been based in Leicester all of my life. Started my first business straight out of university. I was 22, still a wee boy, and I've been going ever since. Over the last 5 or 6 years, we've invested or we've set up a little consortium of partners who invest in new business startups. Probably done around 15 or 20 in the last sort of 4 or 5 years. So always happy to look at new ideas, new startups, talk to young entrepreneurs, and just try and guide them in the right path. And the message, I suppose, I'm making by being here is the investment market is still active, it's still live, it's still there. Money is available. although we've got all this doom and gloom with the pandemic, and it does affect people in different ways, and it's affected many businesses. It's affected many of our own businesses. But the positive outlook is obviously key, and rest assured, the investment market is still live.
Great to hear, and I definitely wanted to dig into that in a moment. So I'm going to share my screen just so we can see the questions that we've had so far. Right, can you see that, Lewis and Haroon? Is that yeah? Apparently, if I highlight it. So yeah, I mean, this one's been upvoted, so it's the. I won't read it. I wonder if one of you could just start off by sort of trying to pull your thoughts together on this particular question. So it's talking about the gap, really, I guess, in earlier stage funding. I guess this might typically fall into the family, friends, and fools round. Often gets called that.
So I'll do that first, Haroon, if you don't mind.
Yeah, go for it,
because it was the same question that was asked at an earlier startup event, Sam, you might recall.
I do, yeah.
And I've noticed that the author of said question is also in attendance today. So good morning, Tim. I hope you're okay. And hopefully I'm not going to contradict the point that the panelists mentioned earlier. Yeah, there is a gap there. Absolutely. Depending on who you speak to, it's valley of death, whatever the phrase is. And it's a risk perception from a funder's point of view, an investor's point of view. And Haroon will talk a little bit about the types of businesses that he supported and his view of risk in association to innovation R&D. But yeah, there is something called the valley of death. Does anybody completely fill that gap? Do we? No, we don't. No, we don't. But would I turn it around a little bit, Tim, and think about ways in which you, as the entrepreneur, the founder of that business, can actually mitigate that risk for the funder and investor. So it's very much a matter of looking at what sources of funding are there, what you can do without funding to get you to a stage where you're going to be more attractive as a proposition to do that. To answer your point, though, actually, there are grant pots and there are loan pots that are higher than that. But it's really what you're looking for the funder to invest in and their appetite for risk. So I think knowing this proposition a little bit, and apologies for putting you in a difficult position, Tim, but I think that you probably need to take a couple of steps, roll the dice, see how you can fund that, dare I say it, working with universities to do some of that early stage validation of your product and your service.
I think actually it was someone from Leicester University who confessed to putting the question up. So just to get Tim off the hook in case he feels a bit embarrassed. Okay, sorry, Haroon, any thoughts on this question?
Yeah, obviously, look, you've got to roll the dice, and you've got to get access to as much as you possibly can at that stage where you're still sort of validating your concept. But post validation, there are many schemes available out there that entice investors such as ourselves to plug that gap. You know, the 50 to 100,000 pound gap. Up to 150,000 pounds is what we look to sort of plug into startups. But when that startup comes to us, we're not really looking for a polished pitch deck. We want the market research. We want a solid value proposition. But just as important for us is the attitude and approach of the entrepreneur themselves or the team themselves. And ultimately, what we find is when you have an individual or two individuals or a team of individuals who are working on a project like this, if they've got a can-do attitude, and if they've got we're going to win whatever it takes attitude, and if they've got a solid value proposition, they'll find a way of plugging that gap, and we love to see that.
And I think I totally agree, Haroon. And I think just to follow on from that, because again, within that question, there are specific points, aren't there? First is around focusing on universities. And in fairness to the universities, and 3 universities aren't unique in that respect, is that actually they do a great deal. And it depends a little bit in terms of whether or not that startup and the relationship between the startup and the university itself. But actually the universities do a lot. And I know from the universities that I work most closely with is that they will do that first bit of fundraising, either through the services they offer or through some sort of convertible loan arrangement. But that valley of death is really there. I think in terms of the specific regional question, Sam, that's raised in that question, I agree. The stats suggest that there are particular barriers for businesses in this region. But I would suggest that it's as much around the quality of the deal flow, or the preparedness of the deal flow, or dare I say it, the robustness of the deal flow, as much as the actual availability of funding itself. And it's about getting that support to understand what an investor is looking for, and being able to work pre-raise of finance to actually address some of those issues, so that your presentation to the investor is far stronger as a result of that. So it's not just about the money, it's about an understanding of where you probably need to get to make yourself more attractive for that money.
Thank you. I think you've done a great job of answering that question. And
apologies, Tim.
So this is a short question. I'll read this. For university ecosystems founded startups, do you think the Midlands is a risk-averse environment in comparison to places like Silicon Valley or Berlin? So, yeah, either of you could jump in for that one.
Yeah, I think should we look? We get it. I get it anyway. I get it. The fact that sort of everyone thinks about tech and nothing else, but there's a whole business world away from tech as well. Yeah, and I think the majority of startups that I see are not tech based. They're using tech and they're embracing tech and being digital. But there's a whole life outside of tech. It's not just about Silicon Valley. What about the guys that are looking at innovating manufacturing processes, or starting food and beverage type offers, or who are looking at providing financial services? They're all embracing tech, but it's not all about Silicon Valley. And I find that with much of the university discussion that I've had previously, I don't know how you see it, Lewis, but you find a lot of the talk is about tech businesses. Yeah, and I think we need to sort of recognise and appreciate that it's not just tech businesses we're talking about.
So I agree with you, Haroon. We've talked about this outside of this panel, haven't we, previously? Yeah. But in terms of looking at the specific question, in terms of the university setup in the UK, no, we are nowhere near Silicon Valley, but we're nowhere near Silicon Valley as UK, let alone the region. So to give you an indication of scale, if you look at the commercialisation portfolios of universities in the UK, you've got the obvious Golden Triangle, Oxford, Cambridge, London universities. And actually, outside of that top 9, top 10, every other university, including every East Midlands university, has a very, very small portfolio of commercialisation of startups. So I think that is an issue, and it's not for me to address that issue today. Bear in mind, we've got 3 universities probably on the call today, but it's not unique to our region. It's probably more of a UK-wide situation outside of that Golden Triangle. And again, universities will often come back and say, well, there are often issues around engaging academics and academia. That's not really what their bag is. That's not really what excites them. Being an academic with a good bit of tech and research doesn't necessarily result in a business that's going to be able to be commercialized and make money. And I think, yeah, we as a country, we fall massively behind the exemplar of Silicon Valley and probably other European centres outside of London and South East. So what do we do about that? And I think it's twofold. I think it's the ecosystem, but I also think actually, you know, the mentality of a lot of entrepreneurs and business people, dare I say it, in this country is very different to probably a US entrepreneurial mindset, and that's taken a period of time to develop or not to develop. And some of the early speakers who were great and fascinating touched on the fear of failure and the idea of pivoting constantly. And again, that's not always ingrained in UK business world, but we're getting there. It's changing, and we're getting there. Yeah, I totally agree. The simple answer to the question is we have a more risk-averse environment, whether it be funders, companies, academia, than Silicon Valley does. It's what we do to address that. That's the question we need to really be addressing.
Great. Okay, so we've had a question upvoted. Highlighted in blue. What is an investor club? How do you get through to the angels?
One for you, Haroon.
I mean, we've got a small investors club. We are a group of entrepreneurs, and we normally sort of bank on HMRC schemes that benefit us to invest in startups. Predominantly, we use something called SEIS. SEIS is a Seed Enterprise Initiative scheme, and that gives investors a tax break when they're investing up to £150,000 in a new startup. And for the likes of our club, it's brilliant. It's a brilliant scheme. I think when the government first introduced it, 2012, it was a trial for a year, and I think it's continued ever since. Correct me if I'm wrong, Lewis, but it's done really, really well. And I'd encourage more people in business to be sort of using the SEIS route to invest in new startups, and it's a brilliant scheme. So that's how we do it.
And Haroon raised a really good point. So if we turn it around a little bit, then as Haroon has outlined, the UK actually, let's be positive, the UK is a really good place for people such as Haroon that have been successful in business, have money and want to reinvest, to actually do that. So through tax relief schemes such as SEIS, EIS and others, the UK actually is a very good place for entrepreneurs to invest in other businesses.
Yeah.
And actually what you do find is that early stage marketplace, that valley of death, actually, as well as the family fools and friends sort of scenario, you actually find that angel investors often live in that world, particularly, probably with all respect to Haroon, please correct me, people such as Haroon and the other investors that he works with. So actually they're there. I guess the real issue is, and again, coming back to the demand and the ecosystem side of the view, is that, and I only came across Haroon 2 or 3 weeks ago, and I've been doing this role for about 10 years. So I've done my job badly, haven't I? But actually, Haroon has, he does what he does for a reason. And actually, with all due respect, he's not going to massively promote himself. He's going to pick and choose what he wants to do because it's his money, and he'll invest it in what he wants to invest in. So there's a little bit of hard work in terms of finding out who those angel investors are. If you go on to the UK BAA website, for example, then you'll find some of the, dare I say it, larger, more established networks that form a syndicate. So you've got a group of investors there that want to be a more open, transparent group because of who they are and what they do. But actually, in reality, there are a lot of investors such as Haroon out there in the local marketplace that are there ready available. And I guess it's incumbent on us all in that ecosystem to make those links far better for our entrepreneurs to the investors and support those investors to become more investment ready so Haroon can do more of those investments. I'm sure that he would love to do that. So it's an ecosystem and a demand side, and the universities play an important part in working with those entrepreneurs to make them investment ready and then be aware of who those other investors are.
Absolutely.
Great. Right, I think we've nailed that one down. So how can non-tech businesses discover and become tech-enabled? Is there an opportunity for all businesses to become tech-like? That's building on the previous comments.
Wow, that's a question.
Yeah.
I think we all need to embrace tech. We all need to incorporate it, of course. But not every business is specifically a tech business. And we embrace as much tech as we possibly can. But we bring in the expertise. I don't want to become a coder. I don't want to develop my own app. But there's so much out there now, so much open source stuff out there, so many people that you can call upon to actually help you with the tech side of things. And yeah, of course, you've got to embrace it. Simple. But you know, not every business is a tech business. And truth be told, I understand the non-tech business world better than the tech business world. We have done a few tech investments, but the non-tech investments that we've done have worked better for us so far. And how do you find the rest of the market, Lewis?
Yeah, so that's a good point, Haroon. So we do delve a little bit in terms of that value of death, as you'd expect as a bank. We're a conservative organisation because we're government backed. We use your money and you expect us to return it. So our fund managers have to make the right deals. It comes back to the earlier point, and apologies, Tim, if it wasn't you in the first panel. But I think you made a valid point around, first and foremost, customer validation. Innovation and tech is fantastic, great, but actually, is it tech and innovation for tech and innovation's sake? Or is there really a problem that the tech solves and a customer wants to buy and purchase? And from an investor's point of view, it's the latter they're interested in, because it's only the latter that they're going to start making a return and then a potential exit from that. So I think you need to be aware of that as a tech entrepreneur. And what's interesting from my point of view, and I know Pete Hitchings from Loughborough has asked that question, is that actually, even at the early stage, our fund managers don't want to be hamstrung by being a sector or a particular tech type investor. They want to be able to spread their portfolio across a myriad of types of businesses and sectors. And there's actually very few sectors in this country that have a sufficient critical mass and attraction for an investor to set up sector-specific funds, even at the early stage. We're starting to move in that direction. So to answer Pete's specific question, we funded Seraphim, and Seraphim are a space sector-specific funder. But even then, they'll be having to look at a wide approach to investing, as opposed to saying, well, we think Leicester's a big enough market to have a space sector fund. I know there's aspirations to do that, but no investor that's looking genuinely for a return is going to do that. It's not sensible to do that. So the important thing for us as a region is to plug in to those national sectoral funds where they exist, but also to support the more agnostic generic funds that do actually exist at a regional level, but accept that actually they will look and want to look at the best investment propositions rather than be hamstrung by having to invest in tech, having to invest in innovative businesses, because that's not how it works. I'm afraid, not outside the public sector, it's not how it works.
Thank you, Phil. And I suppose one thought from myself is that if you are a team, try to have someone who is at least horizon scanning for the latest or emerging tech, because I mean, very few sectors have been left, or not been, or haven't radically changed as a consequence of new technology. I can't think of many. I'm sure there are some, but there are plenty of blogs or resources online that you could follow that might give you some insights into emerging tech that could be applied to your startup or your existing company, your SME.
So just following on from that, it's a question from Haroon, really. What's more important, Haroon, to you? A management team with a track record, or somebody telling you they've got the greatest tech or innovation in the world?
I think, look, both are important. Personally, when I look at an entrepreneur, I'm not necessarily looking for the experience, because the experience will come. I'm looking for a solid proposition as far as the product is concerned. But just as important, Lewis, I'm looking for that entrepreneurial spirit. And believe it or not, we do see on many occasions that it's sort of lacking. People are looking at the way sort of tech businesses are valued. They're coming up with a proposition, coming in with a valuation that I don't understand. and I don't know how it works. So when it's something I don't understand, we normally turn it away. But then you get one or two nuggets that come to you, and you know they've got that entrepreneurial spirit. If they need £150,000, they will find a way of accessing that £150,000, and that that entrepreneurial spirit, together with a solid proposition, is exactly what we're looking for, not necessarily the experience. Yeah, I think we can add a bit of value to the business with our experience. Got it.
And the question beneath it, sort of, I guess we're almost a rhetorical question onto that. I agree. It's not about the tech per se. It's, you know, what is the innovation within the startup, the unique value proposition.
Yeah.
Right. I could also potentially the quick answer to this top one is well, the best way to propose an investment proposition. You could come on our accelerator program.
Yeah,
it's my really quick. No, I mean, yeah, this pitched it. Well, anyway, this isn't about me. I'll let you two chip in. But,
yeah.
Any thoughts?
Yeah. Well, what I was reading from that, Sam, but I totally agree with you. Take advice, take advice, take advice, take advice. But I'm guessing the question is really, how do you approach an investor? So I'll probably throw that one at Haroon. We clearly have lots of fund managers that we work with, and we fund them to fund you guys. So I guess the proposition for me is be prepared, because again, although you'll often have to sort of kiss, what's the phrase, kiss lots of frogs before you find your investor. The reality is that you probably have one shot in reality, because actually you can really switch someone off on that first shot. So you don't want to go in full guns blazing unless you've got a really solid proposition and you've almost tested it with an advisor in terms of having somebody independent to actually challenge you with your perceptions of what the market is, because we often find a lot of founders, particularly again from a tech or innovation side, that focus massively on the tech and innovation and fail to realize that actually when you're pitching to an investor, you need to put yourself in the shoes of that investor. That's what you need to do. So again, take advice and guidance so you're fully aware of what that means in reality. I'll shut up because Haroon's the investor.
Sorry, Sam, I missed that.
I think Lewis is just. Do you have any comments on?
Well, not really. I think you've pretty much covered it there, Lewis. I suppose differences with some of the funds that you channel money through, they'll probably have more of a set sort of criteria that we follow, whereas a smaller group of investors like ourselves, that criteria is a little bit more loose, and we'll take each individual and review and validate based on that individual's sort of position with their business currently, rather than having a set sort of process. The majority of our referrals come via our accountancy practices, actually, and that might be a good route in as far as networking is concerned.
Yeah, for sure, and we talked about that there. Yeah, and the other thing is be prepared to take many shots on goals. You know, it's unlikely the first one will land. Keep learning, keep taking the feedback and refining.
Totally agree, Sam. Yeah, keep learning and be positive when you get responses, because actually the worst thing you can have is somebody saying, yeah, I really, really like it, but maybe come back to us in 12 months. Just ask them, you know, if you get the chance to, when you get the chance to, well, what's your view of it? What do you think I should do over the next 12 months, therefore, you know, to make my proposition better? Because a lot of people, rightly or wrongly, because of the pure volumes they have to deal with, will do that. I like it. It's a little bit early for us. So be cheeky, ask the question. Okay, so what do I need to do between now and 12 months' time in terms of my proposition?
Excellent. I think we've got enough time to just squeeze one more of these questions in. Any preferences? I mean, Lewis, maybe you could talk around the middle on this. Apparently, the investment market in East Midlands is poor compared to other regions in the UK. Why is this, and what should be done to improve it? Mindful, we've got a minute.
Yeah, so it's a minute. That's my day job. Whoever wrote that, please, thank you. Please feel free to contact me. I'd love to talk through it. What should we do? We should be better from a collaborative point of view. Too many of us work in silos, and sometimes I blame myself for that. Build on what we've got, make connections, and advise and support our local businesses, because it is that slightly more difficult to do. But again, hopefully my contacts are available. I'd love to talk to you about that, and also always more than happy to make introductions to our fund managers or to other people like Haroon, who I've come across on my travels.
Excellent, thank you. Haroon, any closing thoughts?
Look, like I said on my beginning statement, really, which is the investment market poor in the East Midlands? I think the investment is there. I think investment is there. I think what's poor is the linkages between the money and the startups. That's the bit that's poor. It's not the actual investment market. I mean, we're looking to invest, and we'll gladly look at Leicester-based and East Midlands-based companies to invest in, and we'd prefer that, in fact. But if they don't come forward, then we'll look elsewhere.
Got it. So perhaps it's the visibility rather than the lack of.
Exactly.
Yeah.
Right. Mindful, I think I've gone over my time. Just a big shout out to Cameron for mentioning Innovate UK. I think he's put a link in the chat. I've been trying to keep an eye on that. So I've stopped screen sharing. I think that's me.
Yeah, I'm going to pick up. Yeah.
Got it. Oh, thank you.
Okay. Yeah, just to say huge thank you to the panelists. So everybody who's joined us today. So it's been a very lively conversation and some great movement and questions and comments in the chat as well. So I think we've covered quite a large amount of ground today, and certainly audience really pleased that we've had a real mix of people joining us today as part of the conversation. So a number of startups, a number of existing, businesses that have been in business for a very long time. So we've had a real mix of people joining amongst a range of academics from lots of different discipline areas as well. But just to say, obviously understanding data as the new oil, we certainly have had a chance to explore that, finding out more about really making approaches for funding, and certainly got to know that, but also the landscape around where we are at the moment in the world around pivoting and really looking at how we operate in terms of recovery and survival. And I think somebody dropped in there, and I think it was Lewis in the chat, have we gone back to that entrepreneurial mode? And I think that has really, people have needed to move to that and dig deep for it. And, really in truth, I think that it is absolutely existent in the East Midlands. And Haroon's comment around, yes, there is money around for investment. And I think really we have got an absolute opportunity at this time, even more so, to actually be making sure that we are having those conversations, making those connections, and actually driving forward opportunities around innovation, new startups, as well as enabling existing businesses to continue in the work that they're doing.